In our trader rundown today, Mark Sebastian of Option Pit Mentoring is here to get our day rolling, and love having you on the show. We are now post-Fed. What do you think about the market action?
Well, you know, not surprised. Fed's not raising rates in November. Shock of all shocks. In other words, everybody knew that. The question is, the market's mostly pricing a December rate hike. The Fed said they're waiting to see if things develop, i.e. they're waiting to see if Donald Trump gets elected president, because I think if Donald Trump gets elected, they don't raise rates. Why? I think markets will go haywire for a little bit. Could be like a little Brexit 2.0 type of thing. Not because it particularly means anything to markets, but just because something long-term doesn't mean anything to markets doesn't mean markets perceive them in the immediate as something that can affect them. Think Brexit, right? Brexit, big, huge sell-off, and then right back to whence we came. I could see something very similar.
A knee-jerk reaction.
A very knee-jerky reaction, but that's enough to throw the Fed off of their game a little bit. All other things being equal, I would be less than shocked if this time next week we're talking about Fed Fund futures pricing at a 90+% odds of a Fed rate hike.
It's just a matter of getting past the election.
Correct.
I have to mention at this juncture as well, we see the VIX flaring up. There's a feeling of on the floor I can't really describe, but there's some uneasiness happening. What's triggering this?
Well, I think that call it a lesson learned from Brexit. Markets basically said Brexit's not going to happen. It's all good, even though polls were razor thin. And then, lo and behold, Brexit happens.
It happened.
Right. And so I think markets are saying, you know what, we're not getting caught sleeping this time. So while people maybe aren't dumping their stock portfolios, there is a lot of hedging activity going on both ends. Looking at the VIX action, there's been lots and lots of upside call protection, but there's been a lot of players betting on VIX dropping as well, which has pushed that VIX higher as well.
The big time players are moving in. Mark Cuban, the billionaire, coming in and saying he has a big hedge on for this. So we'll have to see how the election goes. But as an average trader, is this the time to sit on your hands? This seems like the big institutional guys are coming in. What do you think?
I'm looking at Monday before the election, when all the fear is building up. That's going to be an interesting time to enter the market, because I think that there will be a knee-jerk reaction. And if the market gets what it wants, we could see a very big rally. And if the market doesn't get what it wants, I think we sell off for a day or two, and then probably bounce either way. So I look at that as a statistically significant way to potentially get long the market.
So stay calm.
Stay calm and buy the S&P on Monday.
Interesting. Thanks for coming on the show.
Thanks for having me.